we have a diminishing supply of freely traded Bitcoin with an expanding supply of fiat currency looking for a home. And if we believe that more people are changing their mindset to say, okay, crypto, it survived 15 years. It's going to be here for another 15, 20, 100 years, whatever. I feel okay thinking that this is going to be a store of value. I can use it to pay for things when I need. Therefore, I'm going to take 2, 3, 4, 5, 10% of my retirement income or savings and now start buying this asset. And so all these things come together, and that's what creates a marginal price of $1 million per Bitcoin.
How fast do you think we get there?
I don't know, 3 to 5 years.
Bitcoin could hit $1 million in 3 to 5 years as its supply shrinks and confidence grows. That's the latest prediction from Arthur Hayes, former bitmex CEO. As the supply of freely traded Bitcoin declines and fiat currency continues to flood the market, Bitcoin's value is set for significant growth. Increasingly, people are viewing Bitcoin as a reliable store of value and a legitimate asset to hold for the long term. Arthur Hayes notes that with this change in perspective, many are starting to dedicate a portion of their savings, some even up to 10% of their retirement funds, to Bitcoin. This rising adoption, coupled with Bitcoin's capped supply, creates the conditions for its price to potentially reach $1 million. With this prediction, Hayes suggests it could happen within 3 to 5 years. Make sure to stick around until the end of the video as Arthur Hayes shares more exciting Bitcoin outlooks. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now, here's Arthur Hayes on why Bitcoin is set to surge.
The first thing people need to understand is that the price on the screen is the marginal price of the last trade. It's not every trade that's happened. And so it's the simple example is, how do you become a trillionaire? Well, you create some fictitious company with 1 trillion shares, and then you sell one of them to your friend for $1. Now you're a trillionaire, right? The marginal price is $1 on 1 trillion shares, therefore you're a trillionaire. So I'm not saying that there needs to be, $1 million traded every day at that Bitcoin price. I guess need $1 to trade at $1 million, and that's $1 million Bitcoin. And that informs our psychological perspective on what we think Bitcoin is worth. So with that in mind, what I'm talking about is the marginal flows into Bitcoin. Well, the supply of Bitcoin is fixed. We know 21 million will ever be produced. However, as you have people like BlackRock, Michael Saylor at MicroStrategy, longtime holders like myself and others, people who are just getting into the game now and believe in a future path of Bitcoin over the next 5, 10, 15, 20, 30 years. Are they going to sell? Why would you sell Bitcoin for fiat currency if you implicitly believe that the US government and every other major government is going to increase the amount of that fiat currency ad infinitum? That's the reason why you got into Bitcoin. So as the price rises, there's less people who want to sell it. And if we have this institutional adoption through the ETFs and other sort of corporate finance vehicles, those are sticky forms of holding, which takes supply out of the market, which means it's very easy to have a very exponential rise in the marginal price of Bitcoin, the last traded price of Bitcoin. And so I think that's one facet of just how a microstructure of a market works when you have a fixed supply and a holding base that doesn't want to sell it against an asset that can be infinitely debased. And then the other side, you have the United States trying to reshore industry, issuing credit. You have China has a property bust, and they want to protect their industry, and they're starting down the path of quantitative easing. They just recently announced that they're okay with allowing their currency to depreciate because they believe it's going to help them in their fight against the new Trump 2.0 tariffs. You have the European Union, statesmen like Mario Draghi and Emmanuel Macron openly saying that we need to print more money to revitalize the European industrial base. And you have Japan, which continues to run the easiest monetary policy of any major developed nation. So if you take a look at the entire world in terms of the largest 4 countries and economic blocks, they all are printing money for various different reasons. That's only going to continue. It's accelerating, in fact. And so we have a diminishing supply of freely traded Bitcoin with an expanding supply of fiat currency looking for a home. And if we believe that more people are changing their mindset to say, okay, crypto, it survived 15 years. It's going to be here for another 15, 20, 100 years, whatever. I feel okay thinking that this is going to be a store of value. I can use it to pay for things when I need. Therefore, I'm going to take 2, 3, 4, 5, 10% of my retirement income or savings and now start buying this asset. And so all these things come together, and that's what creates a marginal price of $1 million per Bitcoin.
How fast do you think we get there?
I don't know, 3 to 5 years. I think the economist who made it's a Gresham's law. You spend bad money, you hoard good money, right? So what's the bad money? The bad money is fiat currency, US dollar, euro, yen, Chinese yuan. What's the good money? Bitcoin, gold to some extent. And so what are people doing? They're spending the fiat, they're saving, they're hoarding the Bitcoin, the gold, right? And so I think that's called Gresham's law. Could be mistaken on that. So yeah, you could put it in a physics term, you can put it in sort of an economics term. You can take a look at what happened in sort of like Weimar, Germany during their hyperinflation during the 1930s in terms of people got their marks, they spent them as quickly as possible, but they were also hoarding gold because they knew that was a real money at that time. So we're seeing the similar sort of thing just starting today. And yeah, Saylor can put it in sort of a physics terms, but I think in sort of a social cultural norm, we've seen this before every time any major civilization has failed. And they always print money, they always debase the currency, whether you're in a gold standard or not. It's the same thing over and over again. If you read enough history, it looks the same, it feels the same. I think you have to take Saylor with a pinch of salt and understand where his position that he's coming from. He is essentially issuing dollar-denominated bonds and, I guess an infinite supply if he can, and buying Bitcoin. And every 3 to 5 years, he needs to roll over a certain portion of his debt. And if his stock price is below the conversion price of his convertible bonds, he might have an issue. So yes, he wants the market to believe it's a physical certainty because then you're not going to question the ridiculous price that you're paying for his stock. I am more in sort of the cultural phenomenon sort of camp. We're humans. We're going to in the short term, we're going to say, oh, wow, Bitcoin's 1 million, 100 million, whatever the number is. This is a physical certainty. This is the last cycle ever. You hear those sorts of things on the internet. But at the end of the day, we'll get ahead of ourselves. We'll forecast some crazy dystopian scenario, some crazy hyperinflation. And then if you start to underperform the craziness, then the price of Bitcoin looks a little bit high. Maybe it comes down a bit. And so I think that markets go up, markets go down. We as humans, we're over optimistic and over pessimistic. We're not at that stage yet, but I definitely could see at a point in the cycle where we believe that there is no way that fiat currency could ever fix any of these problems. Therefore, Bitcoin is going to infinity. You'll hear people saying this is the last cycle and all this kind of nonsense. And then the price will dump 90%.
Meanwhile, Heritage Distilling Company is taking a bold step by integrating Bitcoin into its business, making it the first craft distiller to accept Bitcoin for online payments and add it to its treasury. CEO Justin Stiefel emphasized the company's forward-thinking approach, stating, "We're leading the way in the craft spirit space by embracing Bitcoin. Our built-in margins offset pricing risks, allowing us to attract a new audience while benefiting from Bitcoin's growth potential." With its Technology and Cryptocurrency Committee now formalizing a comprehensive Bitcoin treasury policy, Heritage Distilling is establishing momentum for the broader adoption of Bitcoin in the craft spirits industry. Now let's go back to Arthur Hayes as he discusses further.
We live in a volatile universe. Volatility is our friend. Suppressing volatility is not natural. And so government says, hey, through my ability to have legalize violence and kill people because they don't follow my rules, I'm going to protect you. And so let me smooth out that life curve for you. Do what I say is essentially the name of the game for any type of government. And there is some benefit to that, but taken to the extreme, which is what central banks have done over the past 50 years or whatever it is, then you start to get into this unnatural state where the volatility is so low relative to what the natural just ebbs and flows of life in this universe are. And then things just blow up, right? And so you think you're safe, and then you get a 2008 housing crisis, or you get, the European crisis in 2011, or you get the regional banking crisis in the US in 2023. And these are all symptomatic of governments saying, we're just going to print a bunch of money and suppress volatility. But volatility is natural. We want volatility. We want to construct a situation where we have volatile upside outcomes with capped downside. And that's really the goal. And so that's what, Bitcoin and crypto really represents, is there's this outcome where all the fiat money in the world needs to come into Bitcoin. Obviously, that's not going to happen, but you can think of that as sort of the extreme example. And your cost is the price that you pay today for Bitcoin. So some people paid $1 for Bitcoin back in 2010, and if they held on, now it's worth 104,000, right? But the most it could ever lose was $1. And so why wouldn't you take that bet? You know how much you're going to lose. It's the amount of fiat currency that you sold to buy Bitcoin. And so you can sort of self-select your risk profile based on your own situation. But there's always an amount of money that you can willing to lose to earn the $10,000, $100,000, $1 million X return on something like Bitcoin. Well, people are foolish to like the high volatility and have a high frequency of trading. So what you described is somebody who was actively trading in a very volatile situation. There's a very simple example. It's called volatility drift. This is why you should never, ever, ever buy any leveraged ETF. They're terrible products. I should know, I've structured many of them. So you essentially, if I take something that's 100, such a nominal price of 100, and it goes down 10%, goes down to 90, and then I go up 10%, I go up to 99. So I've, on an arithmetic basis, gone down 10%, gone up 10%, but I'm down $1, right? That's volatility drift. And so when you're day trading in and out, in and out, in and out, or using these products that are sort of these daily volatility resetting products, you're exposing yourself to what we call negative gamma or volatility drift. And that's not good. But if you say I'm a buy and hold type of person, you're the Warren Buffett type of person, and you're going to compound over time by systematically trying to reduce your total, your expected loss if you get it wrong, but just keep stay in the game. If you stay in the game, then over time you should do well. But the more you trade, the more money you lose. And that's just a fact. And so I think the fallacy is, oh, I like high volatility. I want to go to the financial markets casino and start trading. And then obviously you fall prey to the simple nature of, like, as humans, we have no idea what the future holds. And so trying to trade in sort of like a very short time frame is a recipe to lose all your money. Of course, there are these few traders out there who are the standout exceptions to that. And then they're sort of paraded across the financial mainstream media as, oh, look what this guy did. He turned $1,000 into $1 million, day trading every day. Here's this system, do this, do that, pay me a bunch of fees, right? So day trading, unless you're very, very good at it, you will lose all your money. And yes, the volatility makes it fun. So if you approach it as an entertainment situation, like you go to the casino, you're going to play craps, you're going to lose money, but it's fun. I'm going to have some drinks, hang out with my friends. Approach financial markets like, okay, I'm going to go trade on my brokerage account or my crypto account or whatever, create some meme coins. I'm having fun. My price of fun is the $1,000 that I'm going to lose over time, but it's fun because I know, yeah, maybe if I get really lucky, it could turn into $1 million. But over time, I'm going to lose $1,000. The authorities globally are trying to restrict volatility and channel you into their preferred investment products, which are government bonds, which, we can talk ad nauseum about this, are intrinsically going to be debased insanely amounts. They want you to go into the, super safe, bond fund that's going to get crushed by inflation that they have to use to write their balance sheet. So that's what they want you to do. But people are like, fuck this. I want to be I want something exciting. I want something where I believe that the game isn't rigged. And so you get the GameStop situation that kicked off in, was it 2021 in January? Now we have meme coins, which are intrinsically all worthless. No one's out there saying they're worth anything. They don't have no utility. They do nothing. They literally are just a manifestation of human culture that we can trade. And so what is the most important part of human culture? The parts of human culture that everybody is participating in, has the most attention. So when you're trading meme coins and a lot of altcoins, you're trading attention. Is this community able to grab more and more attention of the world, of the investing public? Is their joke, their video, their image, their tagline, is it catchy? Do I hear more and more people saying, viewing these memes? If so, okay, I'm going to buy this particular meme coin, and it'll go up in price as the attention that it garners increases. And then obviously all cultural things diminish over time. At some point, that cultural artifact becomes irrelevant, the zeitgeist changes, and then it falls precipitously in price.
Volatility is natural, yet decades of government and central bank intervention have created artificial stability that often leads to sudden crises, like the 2008 crash or 2023 banking collapse. According to Arthur Hayes, Bitcoin takes a different path, offering capped downside with the potential for massive upside. The price you pay today is your maximum risk, but the rewards could be exponential, just like those who bought Bitcoin at $1 in 2010 now seeing it worth around $100,000. Anyway guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.